Court, thank you very much. I am indeed in the top of Bank of America Tower, no less, in the middle of Manhattan, with Chairman and CEO Brian Moynihan. Brian, great to be with you today. Thank you for having us. And what an amazing setting. Great weather.
It's Chamber of Commerce weather out there. And thanks for coming up, Wolf, and enjoy the views.
Yeah, we certainly are. And you gave an interview, you were quoted in an interview with AP yesterday as saying that consumers are spending at the fastest pace you've ever seen. I mean, quite the statement. Talk us through what you're seeing, and is that purely in a good way, or is there a risk of overheating a bit?
Well, I think it's always good if consumers are active because that helps drive the U.S. economy, and it's part of why we are who we are as a society and a country. But if you really, just to put it in perspective, you have to think about the turn from 18 to 19 to 20 to 21. 18 to 19, it accelerated during the year, but got about 10% higher than it was in 18. And so that was sort of your baseline. Pre-pandemic, economy growing at 2%. It picked up from, say, 6% growth to 10% growth. Now, importantly, that's across all kinds of spending, not just debit and credit cards. That's only about 25%, but cash and checks and what people spend money on. It'll total $3.6 trillion this year, to give you a sense. So it's a big number. So obviously, it fell in the early part of 20, then picked up. And by this time in 20, it was about the same as it was in 19. And now, this year, it's 20% plus over where it was in 20 and in 19. So twice the growth rate, reflecting the economy growth. And by the way, in the first part of December, it's actually going faster, too, than it did in November. And so that means consumers out spending the money that came through the stimulus, just spending the extra cash flow they have, and the unemployment's down, and that's good for the economy. So
I mean, you always have that very live data, as you mentioned, with early December. So Omicron hasn't slowed it down at all?
It hasn't. And interesting enough, like in the month of November, compared to 19 to 21, millennials and Gen Z's spending at restaurants is up like 40%. So even when you think that we've closed down and opened, during November's there, and you haven't seen any impact in December at all from the virus. Now, we'll see. If it all comes down to what the societal remedy has to be in order to curtail activities, and knock on wood that the vaccines and all the work they've done to win the war on the virus and all the great science and everything's gone through, we'll keep it under control.
And I mean, clearly, there's a lot of inflation out there at the same time, and consumer spending is just one of the inputs creating that. PPI this morning, again, incredibly hot. To what extent do you think that the Fed is at risk of being significantly behind the curve on that front?
Well, you just asked me a question about the new variant and what's going to have. That's the problem they've been dealing with. What traditional view would be, you'd have the recession, you come out of it, and then you could sort of predict life, or at least try to predict life. Now with this variant, it's caused differences. They've held on longer, but they put between the fiscal stimulus and the monetary accommodation, just a ton of money went in the economy. In those consumer accounts at Bank of America, they have November was the first month that the balance, people carried like an under $5,000 balance before the pandemic, have carried 3 to 8 times bigger as you go down lower. It was the first month in the $2,000 in accounts they drifted down just a hair, 1%. They've been growing every month since July. So what the Fed looks at is, is this a temporary thing in the sense that the stimulus gets spent and it reverts to normal? And what you're seeing is this is hanging on. So I think they know they have to do their job. Chair Powell's been clear about it 2 weeks ago in front of Congress. He was clear about it. So how they do it, it will be a judgment based on what they know at the time, but everything would support that they can start to normalize monetary policy. They've said it, and they'll start doing it probably tomorrow.